Okay, let's kick off. Morning, everyone, and welcome back to our Equity Explorer webinar. I am Karina, if you guys don't know by now. I'm a global equity investment specialist at Fairtree, and I'll be moderating today's discussion with Christoph. So ultimately, the Equity Explorer series was designed as a teach-in on topical subjects in equity markets, where we're just trying to provide some deeper insights into key industries, companies, and trends that could be shaping the global environment. And ultimately, our goal is to equip you with knowledge to better understand the driving forces in the markets and uncover opportunities within them. However, we would like to note that this is not financial advice, nor is it a deep dive into our portfolios. So with that, I'm very excited to introduce today's discussion. It'll be on the ever-evolving world of digital advertising, and we'll be focusing on Alphabet and Meta. So basically today, Christoph will go into depth into how these companies have built vast ad ecosystems that basically monetize billions of daily interactions. So while he's presenting, please feel free to send through any questions and we'll try to answer as many as possible at the end. And yeah, with that, I'd like to hand over to Christoph, who's going to take us through today's deep dive. Christoph, over to you.
Thank you very much, Karina. So just a quick introduction. Like Karina said, my name is Christoph. I'm an equity analyst on the Global Developed Market and the Emerging Market Fund. So let's start. So in today's Equity Explorer series, we're going to look at the digital advertising market with a specific focus on Alphabet and Meta. Okay, so just looking at the contents of today's presentation, first, we're going to go through an introduction of the digital advertising landscape. Secondly, we're going to look at the competitive environment. Third, the resilience of digital advertising. Fourth, AI and advertising, which is obviously very topical currently. Fifth, we're going to go through the sub-financials. And lastly, we're going to go over to Q&A. Okay, so let's start with the intro. For those who might not know or that familiar with the advertising platforms, Meta and Alphabet, Meta currently has four platforms or advertising platforms beneath them of their own. The most obvious ones are Facebook, Instagram, and WhatsApp. But they've recently created a platform called Threads, which is a similar product to that of Twitter. Then looking at Alphabet. So Alphabet basically just have two main advertising platforms, which is Google as well as YouTube. Like with my hyperscaler presentation, I like to start the presentation normally with a timeline of how the industry has developed. So starting in 1998, Google was launched. It's crazy to believe that Google is already 27 years old. So it took them 2 years before they started monetizing the Google product. And in 2000, Google AdWords was launched. In 2004, Facebook launched initially for free. In 2006, Google already acquired YouTube. In 2007, so around 3 years, it took Facebook also to start monetizing the platform. In 2010, the kicks off the start basically of the mobile era. Why this is actually quite relevant, don't think a lot of people remember, but the amount of debates that were happening in the early 2010s, whether Google and Meta will be able to monetize as well as they've done on the browser. And a lot of bears were actually pushing that the monetization would go down due to the smaller real estate. Luckily, the complete opposite was actually proven to be true, with digital advertising actually flourishing on the mobile platform. In 2012 and 2014, Meta acquired WhatsApp and Instagram. And then we go through this interesting period that I like to think started probably around 2017 until 2021-22, when Meta faced immense scrutiny, whether that be from the regulator or just public perception, or as well as just from advertising boycotts. So in 2007 was election, they were accused of intervening in the elections. In 2018, there was the Cambridge Analytica scandal. In 2020, they were also boycotted by a lot of advertisers. In 2021, Apple tried to impact the ability of advertisers to do digital advertising through able to track their users. So they've had numerous headwinds, and it's only been of recent where there's been such a friendly consensus towards Meta, which has actually changed. And in 2024, until we are present, it's been just this AI integration into advertising, and obviously the rise of chatbots or LLMs that we'll also discuss. Firstly, I just want to start with digital advertising. I think this is people look always down to digital advertising and feel quite that it's invasive technology. But I want to turn that around today and say that digital advertising is probably one of the most transformational technologies in the last 20 years, and it's just been enabling the growth of the internet. So digital advertising powers much of the internet economy as we know it today. From news to e-commerce, many online services depend on ads to stay viable and free. It's a sector that has grown significantly ahead of GDP as more business models shift from offline to online. And there's been a lot of debates about what's actually a real alternative or a viable alternative for digital advertising. Remember, digital advertising allows you as a product to have it on the internet to scale to a vast amount of people worldwide, which you wouldn't be able to do behind a paywall. So the only real business models that have found success with paywall are some of the new sites, but the user base is significantly smaller than a freemium type of product. So just on the right-hand side, I said US digital advertising has grown significantly ahead of GDP, and you can see that just by the growth rates and the dotted lines. So if you look at US advertising as a whole, so this includes both the offline as well as the online component, it's gone through quite a transitional period. So in the early 2000s, it was around 1.4% of GDP, and this was largely dominated, as you can think, by offline advertising. Post GFC, we've seen this decline as a percentage of GDP, but it has grown back to 1.2%. This graph, however, doesn't tell the full story. As you can imagine, you've seen a slowdown in the offline component, whilst the online component with the digital advertising side has grown significantly ahead of GDP. And the next graph just illustrates it actually quite nicely. In the early 2000s, sorry, on the left-hand side, you can see that digital advertising was around 95% of advertising, and currently around 3/4 of advertising takes place online. For those who don't know, if I say offline advertising, I'm referring to radio, television, as well as billboards. I think online, we have the expectation that online expectation or the share should continue to grow because we're still seeing that offline business model transition to online. An easy way to, or easy example that I can think of just quickly is television. So television is transitioning to streaming. And yes, some of the streaming products are paid, but there is ad-supported tiers that are being launched, as well as the sports online streaming platforms are probably going to be supported a lot more through advertising. On the right-hand side, if I just use Google on its own as a proxy for search, and then Meta as a proxy for social, I just wanted to illustrate here, since 2010, search has given some share over to social, who's been growing from a smaller base. Google is a lot larger product than Meta. I find all this also just very interesting. If you think of what makes digital advertising different, because it's actually a different product in comparison to offline advertising. The best way I can illustrate is just looking at what they call a marketing funnel. So in the top side of the funnel, it's normally advertising or just creating awareness. This is what we call brand advertising, and brand advertising tended to dominate on the offline side. So what is brand advertising? Brand advertising is just basically using a Nike advertisement or a Coca-Cola advertisement that just tries to elevate the brand's presence. it's not driving any action from you as a consumer to click on something and to buy it. It's just elevating the brand's name and presence in the back of your head. This digital advertising or targeted advertising is a lot more down in the funnel. It tries to drive action at the end of the day. And that's why it's actually been so much more effective than offline advertising. If I can just give an example here of whether that be ad for a game, a mobile game that you're getting on your phone, or on Instagram, an ad to go buy that t-shirt or click on the link to buy that t-shirt, it directly drives an action in the user. And the other part that makes a difference, it's targeted. So it finds, based on your search history or based on the characteristics of yourself, it finds relevant ads for you, basically, that it believes, or the algorithm believes, has the highest rate of conversion with you as a user. A lot of people find this intrusive, which I completely understand. Nobody wants to be created a digital profile of, but in the end of the day, I would actually try for you to try how digital advertising is without it being targeted. You just get basically these bland ads. I'm not thinking of Twitter, or X as we know it. The targeted advertising isn't that great on the platform, and you a lot of the time just get these random ads that don't add any value of your life. If you compare that basically to the ads that you're served on Instagram, which is a bit more relevant and interesting based on your own history. So what drives digital advertising growth? So the most important thing that drives digital advertising growth is the shift that we're seeing from offline to online businesses. I think everyone knows that. That's quite obvious. But what's interesting is that the part of the economy that we've seen that happen the quickest is just through e-commerce penetration. There's a nice correlation with increase in e-commerce penetration and digital ad growth. And it tends to make sense. If you think about it, if you had a brick and mortar store on the high street, people walking past your stores, that's automatically advertising for your store in a way. On e-commerce, or an e-commerce world where you basically compete with the wide open world, you need to pay basically for users to get to your store. You need basically product discovery, and that's actually a major part. What is driving digital advertising is that immense competition that you're just seeing online, and the need to get actually people to your site directly. That's a large incentive for people to pay for digital advertising. And it's quite different actually to the offline brick and mortar model. If you think about it, the brick and mortar model, it's kind of like a fixed cost to serve all of your users. You pay the rent a month, or you pay to build a store, and that's that. People walk past it and they see it and they come in. But on the digital side, you have to pay basically for every conversion to happen. So yes, you have the ability to serve the whole world potentially from your e-commerce site, but you also have to pay basically per conversion to get people to your store, except if you have very large brand recognition. The third point, advertising is highly correlated also with GDP growth, which is obviously it's obvious. Advertisers can always decrease or increase their budgets. It's not a fixed cost; it's a very variable cost, especially for the large brands. So they'll tend to spend more on experimental ads and smaller platforms in good periods. The period that I'm thinking about is coming out of COVID in 2021. We saw significant advertising growth. And then it's easy to pull back also as a whole in periods that we might see recession or fear of recession. A closest period that we've seen that is 2022, just after the good period. And then the last point, which is very important, is just the improvement of advertising technology, and AI plays a role in this, and we're going to touch on that. But it's improved targeting increases companies' willingness to spend on ads. What I mean by this is, as if you have an ad platform, whether that be now Google or Meta, are better able to drive a conversion or a customer for an advertiser, that in turn increases his return on investment on his advertising, and meaning that the next time he's willing just to spend more and more and more, basically, to get that kind of customer into the door. The second part of it is quite interesting that we're seeing now. There's been an increase in advertising inventory or high value inventory on the internet. And the example first that I could think about is short form video, whether that be YouTube Shorts or Instagram Reels. This is a new incremental area where the advertisers can actually create more inventory for customers to spend on, because normally you're in an environment where demand is a lot more than supply. Another place where we're seeing also growth in advertising, again, is on the streaming platforms, where they're trying to develop a targeting advertising product. On the right-hand side, I just wanted to illustrate, you can see the e-commerce penetration in the US increased from 9% to 2018, and it's currently at 16%. Next, we're just going to touch on the digital advertising competitive landscape. So basically, the digital advertising from a market share perspective is dominated by 2-3 platforms. A new one has actually emerged. So the largest is Alphabet or Google, as we all know. Like I said, social has been taking share. That's Meta. And then a platform that you guys might not actually know is so big in advertising is Amazon. So Amazon is currently the third largest player worldwide in terms of advertising. They're very successful in advertising. And the reason why they want advertising is it tends to be at scale. If it's at scale, such a high margin product that they can use the money with that cash that they generate through the advertising product to either subsidize or invest further in their delivery network, which is then obviously a competitive advantage, because you want your packages as quickly as possible and as cheap as possible. Just to kind of illustrate how large Meta is in comparison to the smaller platforms, like this is specifically Microsoft Bing with their search product, Snap, Pinterest, or Reddit. Meta's incremental 2024 revenue, so that's just the difference between 24 and 23, was larger than the total of Microsoft, Pins, Reddit, Snap combined for the 2024 year. So the larger platforms are actually, firstly, they're growing. Also, we'll go into the next slide. They're just getting larger and larger. That's the point that I wanted to make here. And this is just the growth rate for last few quarters for this industry as a whole. So the black dotted line that you can see here, that's just the growth rate for the digital ad market as a whole. And I just pulled it through. And as you can see, Meta grows ahead of the market. Google search grows below that of the market, around 10% is a rate for search. The reason why they grow slightly slower is it's just a lot more mature of a product. But then you see Amazon advertising, Snap, Pinterest, and Reddit growing ahead. What I wanted to point out, which I found actually quite interesting, is this blue line here. That's basically Amazon advertising as well as Meta advertising. And they're actually growing ahead of that of the smaller platforms, such as Microsoft advertising, Snap, Pinterest, as well as significantly, with Reddit being the only platform that grows faster than Meta. It's also important to remember, although Google is growing at 10% and it looks kind of slow to the market, the incremental advertising dollar added is a lot more than these smaller platforms, just because of the scale and the largeness of that platform. So not only from a growth perspective is Google services and Meta family apps doing well, but also from a profitability perspective. So if we just take the GAAP operating margins, Google services as well as Meta family of apps, it's crazy to think that Meta is a 50% operating margin business and Google services around a 40%. whilst the other smaller platforms are struggling to be profitable. And we'll go into the next slide why that is. And this kind of drives my conclusion for the competitive landscape is that the larger platforms and advertising tend to outperform. The large tends to get larger. The heading I've made, why scale creates winners in digital ad platforms. And I'll go into that now, why. But just firstly, Meta's daily active users across all their platforms since 2019, I think a lot of people, I just wanted to highlight this because I think a lot of people think that Instagram is basically already mature. But since 2019, their daily active users increased from around 2 billion to around 3.5 billion. That's almost double, right, over a 6-year period, which is incredibly impressive. And if you look some of the benefits, delve into that, what are the benefits scale gives you? Firstly, an advertising scale gives you a massive data advantage. Data advantage is very important for targeted advertising because you know which advertising to show to what person to get the highest chance of a conversion. So that person going to buy or click on the download link. You also know what quality, what ads will resonate best with what users. So that data advantage is massive on the digital platform side. Another might be obvious to some, but like network effects, that's very prevalent in Google as well as in social media platforms. The larger you get, the more just people want to use you, because all your friends might be using it, or it just gets used to, and you get used to it on a daily basis. And that's what happened basically with Google. The third part is this cost efficiency that I want to speak about. So serving ads on its own is kind of a fixed cost model. So when you reach a certain scale with advertising, the margins or the amount of cash that you actually print off that is significant because of that fixed cost nature. The smaller platforms are just struggling to reach that scale to be able to get some operating leverage on that fixed cost. But whilst the larger platforms are also scaling, there's a second competitive advantage, and that's in R&D. So these platforms are some of the largest spenders in terms of advertising R&D, which in turn improves the R&D, just utilizes that data advantage better and allows for better targeting. The next part is just the ability to facilitate larger budgets. So if you're one of the large brands, let's say a Coca-Cola or Airbnb or Procter & Gamble, you have a very large sales and marketing budget. And there's only actually a few avenues that you can spend that. You can delve it up and spend on the smaller platforms or more your experimental budget, but you're kind of sitting with Google as Meta and Amazon dominating this market and not forcing, but those are the main platforms that be able to facilitate that larger budget to drive you actually incremental conversions. And especially as offline advertising has been decreasing, these digital platforms have just been increasing in importance. And then just lastly, inventory as well as reach. The reach component just has to do with the amount of users across also different demographics and different ages using them. The reason why I'm flagging this is because, let's say, your platform like Snap, your user base tends to be around the 20-year-old. So a big or advertiser that wants to target maybe a different part of the economy, like they can't really use you. And then on the inventory side, like I said, these platforms tend to be, or in the high value supply side or inventory side constrained, but they have inventory across numerous different platforms to be able to facilitate your ad budgets. That moves on to our next section, which I just wanted to speak about, the resilience of digital advertising. The reason what prompted actually this section of the presentation is I've been following Meta for quite some time. And like I said, from the 2018 period to around 2022, it felt like you couldn't open a news app without somebody announcing a boycott on Facebook or on the Meta platforms. And as you can actually see, the revenue growth has actually held up quite consistent through a longer period of time. Only really significant down period or slowdown was in 2022 when we saw macroeconomic pressures as a whole, as well as changes to Apple's app transparency, or the ability for Meta to track users. But throughout this period, we've seen Cambridge Analytica scandals, like I said, numerous advertising boycotts. And as of recent, there's been a lot of articles in the Wall Street Journal or across different platforms on Chinese advertisers decreased spending as a result of recent changes to the de minimis rules. So what that basically is Timo and Shein, because of the Trump's changes to the de minimis rules, it's no longer viable for them to export some of their products or low-cost products into the US. So they're pulling back on these advertising. But if you read these advertising or these articles on a daily basis, you would think that you'd see this big slowdowns in total revenue growth. I just want to go into 2 slides on why we haven't seen that happen. The first point I want to make is just understanding who Meta's advertising base is. So Meta's strength, as well as actually Google, I'm using Meta specifically, but a lot of these points are interchangeable to Google. Their strength lies in the long tail of advertisers. Now, what do I mean of long tails? So yes, you do get your top brands that spend on Google. That's like your Unilever, Ford, Airbnb, and Spotify. But the long tail of advertisers, like let's give 3 examples: Yoga by Sam, Jason's Bakery, and Tom's Plumbing Services, are just as important to Meta. So Meta recently said in a blog that they currently serve over 10 million of advertisers. So that's mostly in the SME and the long tail. So you can imagine there's firstly so many advertisers on the Meta platform. It's wrong to over-index just then on one. And the second slide that I want to touch on is just, I think it would be nice to go through an example of how advertising auction works. So for the people on the call that might be in a marketing department or might be a lot more familiar of how marketing works, this is a very simplified version of just how a digital ad auction works. We understand that there's other variables also, but this gives a nice introductory to it. So firstly, how the ad auction works. The advertiser enters into a bidding process. And let's take this example. Unilever bids for $1 ad, whereas Yoga by Sam bids 80 cents. Second step, what happens is the platform scores each of these ads, with the top ad is going to be the winner. So how do they score the ad? The ad is basically made out of the bid, which is that, and then multiplied by the relevance or the estimate and the estimated action rate. For this presentation, we can just take both of those 2 concepts and just call it a quality score. And if you just remember in those previous slides where I said the data advantage of these large platforms are very important. So these platforms can already estimate what conversion you should get with that ad, or the quality of your ad. And so based on the bid, as well as the quality of ad, the highest scoring one tends to win, or be able to win the bid. But for this example, let's assume with the quality score, Unilever, as well as Yoga by Sam, both have the same quality score. And so what happens is in the third point, the winning ad is shown, which tends to be Unilever, because it's the highest price there. Because if both are the same quality scores, the bid is going to drive who the winner is. But an important point is the price is always the second highest price. It's never, the ad auction doesn't work that the highest price is going to win, it's the second highest price. So the ad is shown at 80 cents. Okay, but what happens now when Unilever decides, oh, we need to pull advertising for some reason? Firstly, the advertisers on that long tail continue to bid. So let's say Yoga by Sam, they still have their 80 cents bid, and Jason's Bakery steps up and they have their 70 cents bid. So what is the real impact or the revenue impact now from Unilever leaving the auction? So the ad gets filled again at the second highest price, which is the 70 cents, but the revenue lost is not the full 80 cents, it's the 80 cents minus the 70 cents at what the ad is served. So the revenue lost in this example is only 10 cents. Now, why is this important? If we go to the next slide, I just summarized two advertise or news articles. The first one is Coca-Cola and Unilever boycott Facebook adverts as Mark Zuckerberg pledges HP crackdown. So that was, I think that was in 2020. But this second example, which is a recent, is a better. Ad dollars from China are starting to dry up. Meta could lose up to 7 billion this year. But we know that the 7 billion is probably exaggerated because of how I explained now the ad auction works. You'll have a second player or a third player that steps up into the auction. So meaning that the revenue lost would never be the full 7 billion. It will be, there will be a revenue headwind, but it will probably, or most likely be smaller than that of the 7 billion. And that kind of brings up the resilience of how these advertising models work, and based on the auction process and the fact that you tend to have more than demand than supply. But what causes a broad-based advertising slowdown, though, on the flip side of that is a recession. So let's say the tariffs that we currently have theoretically causes the economy as a whole to slow down. That will result in slowdown across the different advertising, across the different advertisers, and that will cause a more pronounced revenue slowdown with the platforms. So it's just the example of one advertiser versus the group as a whole. Next, going into a very interesting area is AI in advertising. So if you want to just learn more about the advertising or how, the AI models and hyperscalers, we've done a previous presentation on this at the start of the year, so please revert back to that. There's a lot more detail regarding AI in that. So, but just quickly, Meta and Alphabet both have their own AI models. So Meta currently has the Llama model, and you might not be that familiar with the name, but if you go on WhatsApp or Instagram, that blue ring that you might see, that's powered by Llama. On the Alphabet side, they have the Gemini app or the Gemini model. So Gemini, you can either download the app, visit your browser, or you can access it as part of your search query, and we'll touch into that just now. So there's two facets where AI has had a tangible impact already in advertising. So around 1 or 2 years ago, we wrote an insight piece stating that some of the low-hanging fruit for AI is actually in advertising, and it's probably the easiest way that you're going to see, or the earliest way that you're going to see some monetization of these AI models. And like I said, there's two ways that it's playing out. So firstly, you're seeing it at the better targeting and recommendation side, and then you're also seeing it at the ad creative and optimization side. So firstly, what do I mean by the bigger targeting and recommendation? It's basically just improving the ability of targeting. So the example that Google likes to use is they have a product now where you can submit like keywords that you want to trigger for your advertisement, but then they use their Gemini model to basically associate other words that you might not have used to increase basically your conversion rate. So it improves the algorithm side. And then the other side is the creation of ads. That's also an area that I actually find quite interesting, and I'll just quickly give you an example. So like we said, these advertising platforms tend to serve the long tail of advertisers. Let's say you have an e-commerce store and you're selling 75 SKUs that you want to, and you want to advertise a large part of that. So SKUs is just a number of items. Now, you as an individual person that needs to go through all of these items and make sure that the pictures have the same background or quite visible and format in the same way would take some time. So those are processes that you can start to automate with AI. A second part of that is writing descriptions has been a very important part. So it sounds simple, but if you're a person that have to do this all on your own for all these items, it would take a long period of time. And that process is just so much simpler to do with AI, and someone just checks it at the end of the day. What I'm not saying here is like very intricate, visually stimulating ad campaigns being completely taken over by AI. I don't think we're there yet. What I'm just saying is that it already gives incremental benefits, and actually significant incremental benefits, to that long tail who might not have a whole advertising department as some of the larger advertisers. So what I just took two exits from both of the companies. So Mark Zuckerberg, Meta CEO, recently said, AI's already made us better in targeting and finding audience. Again, that first point. And then Philip Schindler, the COO of Alphabet, said, combination of these launches now allows us to match ads to more relevant search queries, and this helps advertisers to reach customers. So again, to that first point. Just in the 5th of June, I just wanted to highlight an article was placed in the Wall Street Journal. Meta aims to fully automate the ad creation using AI. From an article perspective, it sounds quite surprising, but I think a lot of people were already knowing that a large part of the, or not large part, that some part of the ad creation is being automated, especially on the long tail side. But again, that speaks to the bottom line again. It's difficult to say exactly where this has played out in the financials of the companies, and if we have seen this for sure, this revenue uplift from it. But a theory that I have the closest to that is if we just look at, this is for Meta specifically, the black line is the number of impressions, or you can see as a volume metric, and the orange line is then the price metric. And for the last 4 quarters, pricing has been incredibly strong on the platform. Then this can be just due to a strong underlying economy. But I do believe that advertisers of these new products are driving higher ROIs for the advertisers, which in turn increases their willingness to be able to spend. So this is something to monitor how that plays out. Next, a very topical part also on AI as well as advertising is the impact of chatbots, i.e. ChatGPT, on Google search. So firstly, I just wanted to give an indication of how many people are currently using this wide variety of estimates, but I think it's safe to assume that around 30 to 40% of this is specifically to the US population, are currently using chatbots, whether that be ChatGPT or Gemini on a daily basis. So obviously, the total number of queries that we're inputting is increasing significantly. But I just want to raise this point that not all queries are equal. What I mean by that is you get exploratory and curiosity queries. How does quantum computing work? You also get informational queries, best dog breeds for apartments. That's something that's very important to me currently. And then the third point that I want to highlight, there's commercial queries, best health insurance in South Africa. And that's probably, that is the queries that it's most important to the search, to the search business model. We haven't seen these queries migrate as of yet to chatbots, and people are still using, I think, majority for commercial queries, a search engine. But it's important to continue to monitor this as the technology changes. The second point I want to highlight here is that we're basically also seeing the quality of the models across the different products reaching a commodity-like level. What I mean by that is, if we go look at the first period of time, so the red dots, let me also just give you a description. The red dots here are OpenAI's releases. On the y-axis, we see the model quality scores, and on the x-axis is the time period it was launched. So in the initial period, you can see when OpenAI pushed the forefront, there was quite a gap between them and their competitors. But we've reached a period now where their gray dots are basically at OpenAI's model. So you're seeing, yes, OpenAI driving the forefront, but it's quickly, competition is quickly catching up to them. The black line here is just the DeepSeek models, which are open source. So they also open source models catching up to the red dots continuously. And we can see this from the intelligence index. So yes, O4 Mini is at the higher side, but DeepSeek R1, the latest one that was released in May 25, is also currently at the forefront. Gemini at the forefront, Grok, and then there's this Flash model that's from Gemini that's also ahead in the intelligence side. So, okay, you might be wondering now, okay, then what is going to drive me from one model to the next, or what is going to drive the actual usage if we're seeing a commodity-like level? And this leads me to my next point. I think the distribution at the end of the day is going to drive the winner in this chatbot phase. So we've seen Google has a renewed focus on distribution in the last 6 months to a year. The first example that I want to bring up is AI overviews, which everyone has probably seen. What is the largest bird? If you type it before you get your blue links, you tend to get AI description. I think, well, no, I know based on what the products that they've announced, they are going to get a lot more aggressive on their distribution side. So one of the products that they've announced is AI mode, that they're going to directly incorporate into the Google search page. So basically, next to that image tab or the video tab, you can directly go into the AI side. And the reason for that being is they want to increase their models, the distribution, or get their models at more users, and make their model, Gemini, the de facto model. It wouldn't also surprise me to see integration in Gemini in their wide variety of apps continue to increase, such as Google Maps, Gmail, YouTube. They have so much distribution actually to the end of the day to the consumer. I think if they want to create the most used, and I think that's their goal probably in the next year, they are probably going to increase the distribution of their models to end consumers. Okay, this leads me to my last section, and that's the financials. So let's just quickly start with Google. So Google, currently around 75% of their business is advertising or advertising related, whereas 25% is non-advertising. That has the non-advertising side has grown significantly quicker than the advertising side. So it makes up around 25%, like I said, the non-advertising, and that's subscription services, devices, but the largest being Google Cloud. Area of Google's revenue that I think is sometimes overlooked is this black bar that I just wanted to highlight. So this black bar is YouTube ads. And if we just take YouTube ads here to the right-hand side, we can see that YouTube ads, if we compare it to Netflix total revenue as a whole, is kind of in line with Netflix total revenue. I think people don't realize that. The viewing time for YouTube is also greater than the viewing time, or the viewing time on a TV is also greater in the living room, is greater for YouTube than it is for Netflix worldwide. So it's a very important platform that I think is, just because it's in such a large holding company, people tend to miss it. Also remember, Netflix is a 500 billion market cap company, so it's nothing to laugh about. The next slide, just looking at Meta's revenue. Meta is basically just an advertising company. Yes, there's other avenues that they're investing now, which is AR and VR glasses that you guys probably seen a lot of articles, and you've probably put on an Oculus headset. But I just want to emphasize, it looks like around 99% of the revenue is still just advertising. Next, looking at the operating margins. So the black line is the margins for the group as a whole. The orange lines is just the advertising margins. So the thing that I just wanted to emphasize here is just the improvement that we've seen in operating margins in the last 2 years from the ad products. And we've both seen that in the Alphabet side, but we've also seen it significantly in the Meta side after decreasing from 2021 to 2022. And it's actually been a nice unintended consequence of the huge amount of capital investments that these companies are making. So the capital investments are obviously sitting in the cash flow statement, and then it's depreciated over a 4 to 5 year period. But on the income statement side, or the operational day-to-day side, these businesses have just become more and more efficient. And what has been driving, I think, a large part of that efficiency is the way that they've started to relook headcount. So I'm very sorry for anyone that's on the call that may want a job at Meta or Alphabet. It's getting more and more difficult by the day. So you can see from 2022, basically in 2023, Meta decreased their headcount by 20%. Yes, it increased again in 2024, but on a 2-year stack basis, it's been negative, and for Google, it's been negative to flat. And most of the hires that these companies are making are very intentional hires, whether that mostly being AI engineers. But the sales side, they're trying to optimize or increase the productivity of the rest of the headcount, which has been driving a nice increase in operating margins. I'm not going to spend too much time on this, but I just wanted to again illustrate the CapEx cycle that these companies, as well as the hyperscalers, are going through. If you want more detail on what these spending is going on, again, please go watch our previous presentation on the hyperscalers. But I just wanted to say that Meta and Alphabet are also very heavily investing in these AI models through a large amount of capital investments. Remember that although Meta is seen as a hyperscaler, also the CapEx that they spend is just to serve is for their internal needs and basically to serve their AI models through Facebook, WhatsApp, and Instagram. They don't sell computing power as a commodity like Microsoft, Alphabet, and Amazon does. Then just lastly, on free cash flow. So it's just taking this all together because of how lucrative the search models have been for, or the search or just advertising models have been for these companies. They're able to pay these huge amounts of capital investments out of cash. So both of these companies are extremely cash rich, and they can easily pay that huge amounts of CapEx out of their own cash flow statement. Which obviously is great that they're not levering up into the cycle. And it just speaks to the how lucrative the advertising model is. But that's all my slides for today. We're going to shift over to the Q&A now.
Brilliant. Thank you so much, Christoph. That was great. Maybe we can just go through 1 or 2 questions before we call it. So yeah, let me kick off. The one question that we have is, does digital advertising still have scope to increase as a percentage of GDP, as we've seen a recovery since the GFC?
Yes, I tend to think so. The reason being is this, that firstly, more businesses just shifting online. That's going to continue to drive spending for users. And they have to spend, like I said. It's also not a question of if you're online, you basically have to spend to make your presence clear on the internet, because you're just competing basically against the rest of the world. And the second part of it is just as they're targeting through, whether that be AI or just normal machine learning. Machine learning has always, or AI has always been a component of these algorithms. We've just been calling it AI or a lot more in the last 2 years. But as those targeting models improve and the advertiser at the end of the day can generate higher returns on advertising, that's just going to drive up the auction price again for advertising. So yes, I do believe that advertising as a whole is probably going to increase, and then also the new inventory that is also coming online through streaming. That's incremental, I think, because a lot of the advertising that's been on traditional TVs has largely left. So it's a nice incremental tailwind that we're probably going to see.
Brilliant, thank you. And then maybe we can just move to competitive environment quickly. How intense is the competitive environment between Google and Meta for every incremental advertising dollar?
Yes. So at the end of the day, what's driving an advertiser's willingness to spend is, again, I have to come back to that ROI component, the amount of ROI that he's going to get on the platform. So currently, because they are the two largest platforms, and both of these platforms, advertisers are very successful at finding an end user, they are willing to continue to spend. So I think there is a lot of competition between them, but it's also they are the market as a whole. So customers need to basically spend on them going forward. Theoretically, what a different story would be if we've had these debates actually throughout the last 5 years, where there's a terminal risk event, if I can call it that. In 2022 specifically, it was maybe TikTok shifts. TikTok takes a lot of competition from Meta, and current conversation is whether ChatGPT takes a lot of users from or decreases the amount of queries that happen on Google. In those events, the one platform will get more dollars than the other, just because of the more users that are engaged, or the shifting users between the platforms.
Brilliant. Thanks, Christoph. I think we maybe have time to squeeze in one last question. So we've got a question here basically on Meta's 2 times increase in daily active users over the past few years. How can we be sure that the DAU figures are not inflated by automation or non-human traffic?
That is a good point. From an investor's perspective, there is no way for us to completely say it's that 3.5. It is exactly accurate figure. This is just the figures that are published by Meta themselves. So you can get figures from different sites also that try to track this. I tend to believe that Meta's will be the most accurate. I think that's more important than the absolute figure to view is the trend line that it's been increasing. And we know for sure that, not know for sure, but we know for sure that short form video on Instagram as well as on Facebook have been driving the incremental engagement on these platforms continuously. So I do believe that the trend is up. If you're asking me, is that 3.5 million? Is there not some bots or stuff happening on that? And are they excluding that accurately? That's impossible to say, and there might be a chance. I know they try to in that figure exclude it, but we don't have that much transparency. But I just want to emphasize the conclusion. I believe that the line is going up, though.
Brilliant, thank you. I think we're going to call it there today. If you have sent through a question and we haven't looked at it, we will get back to you, or you can just pop us an email if you have any further questions or would like to interact. But yeah, that's today's session. A big thank you, Christoph, for the really insightful presentation. And thank you to the audience for all the engagement and the questions. And yeah, we look forward to seeing you on the 10th of July, where we'll be discussing vehicles, specifically looking at EVs via Tesla and BYD. Awesome. Thanks so much, everyone.
Thank you, everyone, for your time. Bye-bye.
Bye.